Okay. I think I'm live. And I'm going to probably have to screw this up a little bit, but oh well. Oh, let me put on live chat. I'm late. You can beat me up later, but I am late. Let's see. That's not it. Okay, 1-2-24. Hit the thumbs up button. Morning, John. Happy New Year, Chris. Let me see. Trash. Boom, boom. Morning, Joe. Yeah, I mean, look up here on the upper right where I've got the core portfolio. Apple's down 2%. Boeing's down 1%. I mean, here's the thing. That's kind of a normal. I mean, it hurts to lose. Lilly, which was in a pullback, has some confirmation of 580 going up. You can see that there's some really, Pan W back under 300. That one's been a pullback, but that's getting out of a 22% gain on the algorithm. You know what? I should probably put this in. But I'm, overall, I just don't. I think it's just your normal kind of. There's nothing other than we're in a new year. People are selling some of their high flyers because it's post-tax year, so they're going to reposition themselves. And anything that you have that's super high flying, you may want to think about trimming a little bit. I'd say anything that beat the S&P last year, maybe trim. Hold on 1 second. Pull that up there. Oh. Yeah. Chris, I've got heavy six figures of cash to deploy. And that's why I say I think this isn't, I wouldn't consider this harsh. I mean, it's rough. Uber's probably going to get under 60. But morning, Mike. Yeah, but guys, here's the thing. Look, it's a rough morning. But when we look at the Qs, you've got, I put this note in there, getting ready to span out again. This doesn't always mean bullish with the Bollinger Bands. The Bollinger Bands are just an indication that the stock is getting ready to move. And what's happened in the afternoon on, even though you had a green candle, you opened up at 409. You closed at 409.46. So you were 46% up. You went to 410, but you lost, 409. You're underneath that 9-day. So understand that we're getting close to, you don't want to necessarily pull out because look at what happened here. You kind of lost confirmation. And so you don't give up on this. You go out to a weekly and you see we still have confirmation on a weekly. We're still kind of touching up on that all-time high on the Qs. But the RSI down here is at 70. Your MACD still crossing up. So you don't give up. You're never going to time the top. You're never going to time the bottom. If you feel, I kind of guide you in this all the time. If you're losing sleep, if you're uncomfortable, get out. Take your gains, get out. Just get out. So I got a ton. This one's kind of interesting. I read this one. We're going to get out there. What do I have? I have alerts. I hope nobody commented. Nope. It wasn't comments. I do need to I'm going to update the pricing today. Remind me to change the pricing of the newsletter at 1 p.m. today.
Okay. I had to change the pricing of the newsletter for this afternoon at 1 p.m.
You have till 1. It is now 9:15. So, okay, let's do some scans. MPLX. Scans. MPLX. You always have to put things in perspective. If half a bucket of water falls out of a bucket, well, was the bucket full and you just lost a half of it? Or, was the bucket only half full and you lost the entire bucket? You haven't lost the entire bucket. So, and I do need to start my crypto list of stocks and share that out. XLU. And here's the other thing. I mean, there will be a time to kind of trim a little bit. And I know I put in the paid newsletter, some predictions, and one of the predictions just kind of morning, Nevin, was, hey, Tom Lee has been more right than wrong. We should listen to him. And he says there's going to be a choppy first half where we probably are down, but he says the second half is looking very good. And specifically, he said that the first half, he thinks the full year will go to small and mid caps. Is there? Hold on. And specifically, he said that the first half. I don't hear it. He thinks. I've got my iPad on. You know what? I think that was. Hold on. You might make sense here. Hold on. I think this was the issue. Is it better? Yeah. And Nevin, tell me if it comes back. I think what I discovered weeks ago was you're like a dog, Nevin. Only certain people can hear those sounds. But it's the light. The light causes some interference, I guess, with the microphone. And so I have to plug it in. Okay, hold on. Okay, I'll get your bed too. Man, you two are... Okay. Here. Okay. We'll put you under there. Penny, you can't sit on top of the thing. Oh, man. Good girls. I love you both. Okay. High-pitched noises annoy everybody. But I just think it's funny. I couldn't hear it, so... But my hearing as a former drummer in a hair band, my hearing has been shot for years. So, specifically the high tone stuff. O'Reilly and KHC. I mean, is this the time when KHC starts to come back? But, I mean, look at that drop. Okay, S&P. Verizon, Southern Company. I don't like Philip Morris as a company, so I'm not going to put them on. Happy New Year, Go Girl. Okay. Yeah. As a drummer in a hair band, I will tell you it was fun. It was fun. Still, I wish I would have worn earplugs most of the time. This is getting killed. My portfolio is going to be down quite a bit. This is why you want to look at the charts. This was put in right about here. And the MACD was crossing down right about there. So, hey, this is why you want the charts. 2%. Could have saved myself 2%. Remove this segment. Okay, let me see. I've got... Okay, we're going to open up our links. Anything on... Walmarts are selling. Natural gas up 3%. So KOLD is up there. Morning, Scott. Let's see. You know, we're going to do... We're going to open this up too. We're going to move both of these. And then I'm going to... let's see. We're going to go over here. And then the old cover. And we're going to do preview. There we go. And we're going to... Okay. And then I think I've got everything else. You know what? I do want to bring on. Want to see hairband days? I think I have that picture. Let's see. Let's see. There I am. Hairband. Full on. I have others. I have that too. Hey, D-Man. What up? I have quite a few hair photos. Yeah, Tom. I mean, again, Scott. I was saying before. I think Tom Lee has been more right than wrong. If you're nervous about stuff, take that with a grain of salt and kind of put on there. Okay. Rivian, please. Fairly new listener. Okay. PBLA. Then Scott stuff. Palantir. Okay. I got enough to go over. No. I got to tell you, Tommy Lee's a fantastic, incredible drummer. He really is. Okay, let me look real quick. Oh, I do need to look up. Here, I'm going to close this. I'm going to look at Tesla deliveries. I had notes that Tesla was essentially going to blow out the numbers. And they did. We're going to put that in with our Tesla analysis. Okay. I mean, Christian, that was, you don't see that stuff anymore. And that was just epic to me. Sitting there upside down drumming, and that was awesome. Let's see. And Apple, economic downturn, social requests. Okay, let me start opening up the links now, backwards to forwards. Okay. Oh, did I not put the Apple one in there? Okay, we'll do this. Wah, wah, wah. There we go. That's going to open up. Oh, I've got the moving averages. Okay. Oh, I'll just put. We'll just do the. Okay. Here's the oh shit moment that I wrote down. We're screwed. We're just screwed. We're totally screwed. Yeah, we're screwed. Okay, I've got that. Let's start out with. course, I'm old enough that I experienced it. I went to, what was it? Skid Row, Motley Crue. Yeah. I don't have a lot of memories of those days. And it's not memories that I don't, didn't want to listen to. It's just, okay, Tesla's up. Exxon's up. I graduated high school in 1988. I think the Girls tour was early 1990s, I think, maybe mid 1990s. So I was out of high school, but I was the guy. Yeah, we're old. Hey, high five to all the old crew. Okay, I think I've got everything that I need, so I'm going to hit record now. If something pops up, just let me know. I think my iPad's going to restart here once it gets the update, so I may not be fully able to view, but okay. Happy 2024. We finished the year. We finished the year up. We had some fantastic returns. And good morning. It is Tuesday, January 2nd. Happy 2024. If you're part of the paid newsletter, you saw a bunch of this stuff. I did do a free portion of the paid newsletter with the rules of the podcast. And so it included predictions, but the rules of the podcast, very simple. I will, here on 2024, I will state them right now. Don't listen to a douche on the internet, and I am a douche on the internet. By the way, if you want to read these rules, they are on the Daily Stock Pick newsletter. You can go to the link tree, which is the link down below. It's the fourth link down here, or you can just go to dailystockpick.substack.com. But this post right here, 2024 predictions, stocks I like heading into the new year, and rules to follow in the new year. The rules of the podcast. Number one is always do not listen to a douche on the internet. You need to understand what you're buying. You need to understand when somebody says this is a hot stock, you should get in. Do not just go out and buy it. Do some research into it. Number two rule, do not listen to Jim Cramer. This goes back to number one. I was one of those guys who listened to Jim Cramer, and I was always like, oh my God, he says it's a good stock, I should get in at times. And you just got to go out and do your own research. Now, speaking of that, we're all screwed. Because as you know, inverse always wins. Well, Jim Cramer said, Happy New Year, everyone. 2024 will be the best year ever. Extremely bullish on 2024. We're screwed. We're totally screwed. This may be a Bear Stearns moment. Bear Stearns is fine. Do not take your money out. It went from zero in a week. Here's some of his worst predictions. If you want to read them, you can kind of see it. Number three, buy good companies with good profits, with good products and good management. This is just simple. That's why I put together the core portfolio. You can see the core portfolio in TrendSpider. It's over here. You get it as part of signing up for TrendSpider. I also have it on Savvy Trader if you want to sign up for Savvy Trader. All of those links are in the link tree. If you lose sleep over a trade or investment, just get out. Give a man a fish, you feed him for a day. Teach a man to fish, you feed him for a lifetime. Learn from that strategy. Understand, if you lose sleep over a trade, it means you're uncertain. If you do your homework and you get into a trade, you can definitely cut your losses, and that's what number 5 is. Don't water your weeds. There's a great quote from Peter Lynch. It says, selling your winners and holding on to your losers is like cutting the flowers and watering your weeds. Understand, those are the rules. That's just the simple rules of this podcast and the simple rules of any strategy that you put in place. You should absolutely 100% read this newsletter. Again, dailystockpick.substack.com. It is free. The only ones that are paid are the weekend newsletters. And as a thank you to 2023 being such a good year for the podcast, I put those rules in writing for you. It is free. You don't have to pay for it. You basically just go to that one. And if you're not a paying subscriber, then you scroll down and you won't see the predictions for the next year. You just won't see the predictions for the next year. Simple as that. not bad. Again, I try and give everybody something for free. And again, the link tree, the first link is to sign up for TrendSpider. You'll get the best offer available, whatever. We'll go into that a little bit later. But first thing is, Jim Cramer saying this. I mean, the comments are priceless, but you should be scared. Jim Cramer has been tremendously wrong over the last year. You know who's been right is Tom Lee. And Tom Lee has said the first half of the year might be a little bit tumultuous, to say the least. He does think that small caps outperform. So listen to Tom Lee. You can see all of that on Twitter. I'll probably put some of that in the newsletter over the next week or so. We'll kind of see how things shake out. Here's a chart of QQQ. The Bollinger Bands are cinching up. Understand, and if you don't know what Bollinger Bands are, do your research, understand what they are. But they are a tool to understand when markets might turn, whether that's up, whether that's down. But they are a tool to understand, hey, they're going to cinch up and they're going to go. Here you see them cinch up a little bit right here. We took off to the upside. Here you see them cinch up a little bit. We took off to the downside. Here you see them cinch up. Look, that one right there and that one right there, that's a cinch. And then they expand out and we expanded up. You cinched right here and kind of faked you out a little bit. We went down, but you went back up. What's this one going to do? Well, it's 9:30 right now. We've lost confirmation on QQQ. The algorithm, the 4-hour algorithm, has not gotten you out yet. Probably will get you out in the next couple of days, but we're looking right now. If you got in at the beginning of November at 353, you're looking at a nice 15% gain, even if you got out today. So understand, the algorithm protects you. What it does is it actually just takes emotion out of it. So, it's based on a MACD strategy. You can see the MACD down here. We crossed down on the MACD. The RSI is going down. So sellers are selling. What's happening? Well, it's the beginning of the year. Nobody's, complicated by taxes at the beginning of the year. What they want to do is they want to sell their winners. They want to sell their apples that are up, 40% in a year. They want to sell that and they want to move it somewhere else because it's probably become a very large portion of their portfolio. So people are moving money. This isn't anything necessarily to be concerned about. The market is still good. The economy is still healthy. The Fed is still going to reduce rates at some point in time this year. So understand, we're going to go through some tumultuous time. You can see Apple's down 2% right now. The core portfolio is down. Devon is up 1%. Energy is up because of the stuff that's going on in the Middle East. Oxy is up 0.69. It's up above 60 again. Pepsi is up above 170. Palantir is down at $16. We'll go over that one in a little bit. Shopify is down 2 points. It touched 80. I think it got to 79.99 and then just pulled back. Tesla is down 1%, even though they delivered. We'll talk a little bit about that as well. But just understand, it's a new year. People are starting to sell because of the run that we're on. It might take a little bit of a breather. But if you got in at any point in time during this time, my suggestion is just wait a little bit. Nothing crazy. Wait a little bit. You're not going to time the market. If you want to get out and you're nervous, get out. Trim it a little bit. I will put in the newsletter the S&P 500 year-end targets for 2024. This is something that I compiled up. It is JP Morgan 4,200. Let's go over and we'll look at SPY because the S&P trades on SPY trades on the S&P. So 4,200 would be 420 on 2023. I'm sorry, on SPY. You're at 472 right now. JP Morgan is really bearish. Morgan Stanley, 4,500. That implies a pullback as well. Wells Fargo, 4,625. That implies a pullback as well. Now, we get into the upper ones. That is three banks that are down below. Evercore, 4,750. That's up. Barclays, 4,800. That's up. UBS, 4,850. That's up. Bank of America, 5,000. Goldman Sachs, 5,100. Deutsche Bank, 5,100. Citi, 5,100. Fundstrat, which is Tom Lee, 5,200. Oppenheimer, 5,200. So I will list the best stocks of the year with a market cap over $5 billion. The number one, just so you know, something that Jim Cramer at the beginning of the year said, get the hell out of. Honestly, I don't blame Jim for this one. I would have told you to get the hell out of Carvana as well. It was going bankrupt. I don't exactly know what happened. Carvana was up 1,062%. 1,062%. Let's just go and we'll look at a weekly on this one to try and see when the January time hit. Let's see. We're going to look at January right back here, January 2nd. If you got in at $4.20, let's just say $4.40, and you're still holding, that's 1,070%. Now, Carvana's down 5%. I don't expect it to soar this year the same way that it did, but you can see it was up here at 295. It is a crazy expensive stock. They are losing money. They are not making money. Price to sales is 0.54. So you're not looking at a complete turnaround in this company. They're still losing $242 million. But I'll include these. Supermicro Computer was up 244%. This is one that I still think covers that $350 gap. It is at 281. It's just sitting here capitulating. We had this get out at 6% gain right here at 281 on today's candle. So if you want to get out, you can get out. I'm sitting here holding. It's in a long term, so I want to do it. Affirm was up 244. DraftKings was up 227%. NVIDIA up 244. I'll include this entire list in the newsletter. The worst stocks of the year, JD.com down 53%. Moderna down 45%. Pfizer down 45%. Dollar General. These are some of these stocks are ones you may want to take a look at as bounce back, specifically Dollar General. I think that's DG is what the symbol is. Yeah. This one, it's not crazy to think that you cover this gap at 154. It's not crazy. The valuation is not nuts. Even with the economy doing well, there's a certain segment of the population which will continue. You're seeing the Bollinger Band cinch up. You're seeing the MACD cross up here on the weekly. You're seeing the RSI in no man's land at 47. Not crazy to think that we continue upwards. Now, the 9 days moving up, the 21 days just turning around. You had the death cross back here in September. This is a stock that, if you go back to 2020, I mean, this would during the pandemic when the world was shut down, this was trading at 134, trading at 126 136 right now. So, you want to take a look at these things. Markets move fast. These percentages may change rapidly. Always do your research. That's the best and the worst of 2023. Now, if I go over here, I want to show you something. The first thing is, we just went over the 2023 predictions. Look at, Barclays, minus 4%. This is what they said 2023 would be. And how did you wind up? You wound up 26% up. They're all wrong. Do not listen to douches on the internet. That's the number one thing. Do not listen to douches on the internet. Again, take these as information that you can use to try and help guide you. But don't think that somebody, even Tom Lee, who's more right than wrong, he's going to be wrong. So understand that you need to do your own research. I will include the thing on the right, the mastering moving averages. I will include that in the newsletter for free. So understand that I will include that one for free. You can just get that, whatever you want. Here's a great article from Seeking Alpha. S&P 500 returned just under 25% in 2023. Where are you going to look at? It's a great, nice little look ahead. It's a good article. So that will be in the newsletter as well. This is a great look. Tesla, and we'll talk about this one first. If anyone tells you trend lines don't matter, show them this Tesla chart. This is exactly what's going on. Look at where the target price is going when you just do trend lines. When you can say, okay, this is the daily. It's got some resistance there. Where's it going to resist big? Well, look at that long-term trend line. This was the all-time highs, and that's the weekly trend line. If you look at this and you take those trend lines and you move them from a weekly and you go to a daily, you can absolutely tell the resistance. So again, they draw themselves. Understand, Tesla is one that you want to take a look at. Now, Tesla, they announced their deliveries. They blew it away. I had notes in my I wasn't sure if they were coming out today, so I wrote my notes. here in Georgia, and I do follow Tesla because I wanted to buy a Tesla. I almost bought one yesterday. I almost bought the Model Y yesterday. But here in Georgia, they sold out of their inventory. My friend works for Tesla in Florida. He said they sold out of their inventory. These are cars that still, even with the expanded production that they've done in Texas and in Fremont and in Berlin and in Shanghai, China, these are cars that are selling out. They blew away the deliveries. So, even the analysts couldn't predict that. Now, Tesla chart. Let's take a look at this one. Tesla right now is down 1.42% today, even with those deliveries. I am not in Tesla. At the year end, I did sell a lot of my XLY, which is 50% Tesla, 50% Amazon. I did sell a lot. And the reason was, Tesla and Amazon drive that. And Tesla and Amazon have had great years. So I said, let me take out XLY. And I really want to put it into XLK, but I'll probably throw it into QQQ, to be honest, to be a little bit more diversified than just Apple and Microsoft, because I hold so much individual Apple and Microsoft. But Tesla's chart, you can see it's just lost its confirmation. Now, it got you out with a 14% gain here right on December 13th. Got you back in at 251. This was a good run, but when it lost confirmation here up at 259, I said even last week, I said be a little bit nervous about this one if you're a short-term trader. But if you're looking to hold on for a long term, I don't think you have too much to worry about. Again, the car's demands are in place. Elon saying stuff is just Elon saying stuff. The thing you have to worry about here with Tesla this year is not necessarily the demand. I think the demand will continue because remember, in the new year, the $7,500 tax credit, where it was you had to make $7,500 in order to pay $7,500 in taxes in order to get that kind of back. It was a little wonky and stuff. That now becomes a point of sale $7,500 back. So you no longer, when you buy a Tesla, have to do a damn thing to get your $7,500 off. It is at the dealership. They give you $7,500 back. So it's interesting. I mean, again, take a look at the long term. The Bollinger Bands are cinching up. You're kind of losing your confirmation. If you're going to get in, I would probably get in, around 220 if it hits that. If you're worried that you're going to miss the boat, say you want $1,000 worth of Tesla. Well, add $100 today. Because if it goes down by a few percentage, you're not worried. But then when it goes up and it regains confirmation, you can add more. Just be patient. Understand that part of trading is being patient. And Tesla, in my mind, again, the thing you don't have to worry about is demand. The thing you really have to worry about is Elon going to start selling some of his Tesla stock again in order to fund Twitter? There's a lot of reports out there that Twitter is, undervalued and it's down, 70-something% from where he bought it. If they need money to continue it to run, don't expect Elon to be able to go out and raise money for it because it's down 70-something%. Nobody's going to throw him money to continue Twitter. Even the big guys, his billionaire friends won't throw him money to continue Twitter. He's going to have to sell it. He believes in it, so he very well may sell it in order to, and that's going to hurt the stock. He's still by far the number one shareholder. I will include another TrendSpider chart of Apple. Longtime listeners know over 50% of my portfolio is in Apple. It's my savings account. I love it. It's down 3% on a downgrade today. Let me see who downgraded it. We're going to just take a look here in FinViz. The average target price from analysts is 197. Downgrade from Barclays, equal weight to underweight. They're bringing the price down to 160. They were at 161. I don't think, they're taking a look at the Vision Pro. I don't think they're taking a look at the iPhone. I don't think, you did have a double top. And I said when it gets around that $200 point, it's going to be tough to get above that. It is going to be tough to break the two handle on this one. And the reason is the valuation. Look at the PE, 30. Look at the forward PE, 26. They have reducing revenues for, I think, the past 3 or 4 quarters. That's going to be hard to come over. But what you don't see in this is the fact that they have bought back billions of dollars of shares. So as they continue to enhance and let's be honest, they have created product categories. They have created the watch. They have created the headphones. They have created everything, and they've created the iPad. They created the iPhone. I mean, they create these categories. They have created their own chips in their Apple. It is the best laptop you can buy. Money for buy. Oh, I'm not on the charts. I should have been on the charts. Oh, well. You're going to have to subscribe to the newsletter to see the charts. But here's FinViz. Yeah, if you're listening, great. If you were watching, you weren't on the charts. Oh, well. But you'll have to, this is what you have to understand. Apple buys back their shares. What that does, remember over the past year, I've told you, hey, don't buy into this company because they don't have enough cash on the books and they're probably going to have to issue shares. Apple does the exact opposite. They actually buy back their shares and then retire them. So they still have tons. If people are selling here at 187, 188, you know who's buying? Apple. You know who's buying? Warren Buffett. He can't get his hands on enough. So I think you have an opportunity here. Again, at 186, I wouldn't buy here. You've lost confirmation. I said this is the chart here. I said button hook was forming. And it was forming up here. I said it. When it got you out at 12% gain, it wasn't at the top, but the algorithm got you out with a 12%. I said the MACD is crossing down. That was way back here on December 18th. We were trading at 197, 196.48, 196.48. Back here, you were trading at 199. So you could have gotten out back there. Again, the 200 level is going to be a psychological level. Where are you coming back to? I think you're going to provide some support here at 185 with that gap. I think at worst, the 200 day at 182. If this gets under the 200 day on this 4 hour, absolutely load up the brink truck if you want. Again, this is going to be one of the things that with Apple, when the economy was bad, people piled into Apple. That shot the price up. People loaded into Google. That shot the price up. The Great Eight, people shot into those last year. There was FOMO. FOMO is a strong thing. Understand that's going to be tough to overcome. So the Great Eight may underperform the market. I continue to think that double top right there that I put in at $200 right there, I think that's going to provide some resistance. I think at worst you get to this 50-day at 175 on the weekly. Again, if you look at the long term of this, it hugs that 50-day. When it gets under that 50-day, it's an opportunity to buy. So if you want to do it, that's great. Yeah, everything's fine with Apple. You did see on a daily. Let's go to the daily because I'll post this in the newsletter. Apple does have a head and shoulders pattern. So you can see this is a shoulder. I'm sorry. This is a shoulder. This is a head, or that might be another shoulder. I'm looking at the chart. TrendSpider drew this one. But we're looking at daily. Let me see. So yeah, shoulder, head. Maybe there's another shoulder in place. If this comes back down, and then we see another shoulder on the right hand side, we might have a problem. Again, head and shoulders is not a great pattern to do. Economic calendar from Webull. I love Webull. Start your year out right. Go over here to the link tree, linktr.ee. Put $1,000 into Webull. Join Webull today and get free stocks right here. Just join it. The third one, I put $1,000 in there in December of last year. I put $1,000 in, and let me see. My Webull account right now is at $3,825, $3,825, not $38. I didn't do that poorly. But solid. I love the app. I love trading in the app. Understand, I have two brokerage firms. I have Fidelity for the majority of my account. The 7-figure accounts are in Fidelity. And then I have Webull. And the reason is I love trading on the Webull app. I might put more money in there because I do enjoy it so much. But the top 3 earnings this week, STZ, this is Constellation Brands. This is one, if you're into the POTS type stuff, this might be one you want to look at because I think this is a better opportunity for you in the POT sector. than any of the pot brands, because I think this one with drinks is going to actually do a little bit better. Okay, hold on one second. Good morning, Sherry. I'll be right back. Okay. Okay. Hit that thumbs up button. I'm going to start recording again. And so you've got Constellation Brands, you've got Walgreen Boots, WBA, and you've got Lens Walton. LW is what they told me. Let's see. This is from Weeble, so it tells me some really good stuff. Lamb Weston. Wow, look at that one. Look at that one. Up 19%. I think somebody asked me about this. Should you buy it? Hopefully I said yes. But, I mean, you're only up a couple of percent from where I said. But it's still got confirmation, way above it, still going, got that golden cross going on. So those are the three things. Major economic events, we've got ISM Manufacturing, JOLTS FOMC meeting on Wednesday. Tomorrow, non-farm payrolls on Thursday. ISM Services PMI for December, that's the inflation stuff. Did anybody buy the dip in Mara? Because Mara, I was freaking out because it dipped so much. It has lost confirmation. I said, what's this note? Starting to see Mara break down a little bit as it loses confirmation. That's what I said before. I still think that $30 is probably right here. I put in that resistance line up there. I do think that $30 is going to be tough to get over. I bought at 26. I did not sell at 30. I was hoping to sell at 30, but I will just add more. I do believe in crypto. I will probably, like I said, on, I think it was Friday, BITO is the one that Kathy Woods bought into. This one's up 22. It is up 8% today. So this one didn't experience. Now, this one did get you out in the algorithm with a 41% gain on Friday, but up 8% again. I think this one from a long-term standpoint, I think since Kathy Woods is buying, I'm probably going to buy into this one as well. I like it going to 27 or so. I like that one a lot. Dex from Spotify, FSR, thank you for all you do. Appreciate the podcast and the feedback. FSR is First Solar. I'm sorry, this is Fisker. Fisker is FSR. So I am an electric car owner. I like the Fisker car. I will tell you that Fisker, I think, has one of the best designs. Their technology is probably top-notch. They are using the Apple kind of Apple model where they have somebody else manufacture the car. So their margins are a little bit wonky per se. They're not making money. I don't think you necessarily buy that dip in Fisker. You can see they're losing $468 million. It's not one that's coming back anytime soon. They have, cash on hand, $1.79. If you just look at 350 million shares outstanding, what's 1.79 times 350 million?
The answer is 626 million.
So they have 626 million bucks on hand, but they're losing 468. That doesn't bode well if they are continuing to manufacture and pay for the manufacturing of their vehicles. They're still going to have to raise some money. So that worries me a little bit. The average target price is $3.75, $1.66. Most recently, downgrade from Evercore, $6 to $2, and you're trading into $1.66. $2 is kind of a hopeful one. You can see there's been some 10% owner has sold $10 million worth, 17 million shares. So they bought some back in January, and then they sold it in February. So, and that was at the $6 range. Nothing huge recently. I mean, that's March of last year. So nothing really kind of raised a red flag. But I'd kind of say, stay away from that one. I'd rather see you buy it at $2, miss the $1.64 to $2, and buy it at $2 for that run up to this gap. But with them losing money, that's a tough one. Alex asked about from Spotify, Rivian. And Rivian is another electric car company. This one, I've said, hey, it's going to $30. At some point in time, I think it gets back to $30. It's down 9% today. This is a tough one just based on valuation. Everyone thought when they came out, they were going to be the next Tesla. So they did a huge offering of shares, 918 million. Their price to sales is 5.45. If I look at Tesla and I just look at the sales, their price to sales is 8.12. But Tesla's making money. And Rivian did that bond deal where they needed more cash, so they issued the bond. Rivian has a deal with Amazon. If you haven't seen the Rivian Amazon van, it is amazing. The average target price here is $25.95. You're trading at 21. This is one that last year it was up 15% last year over 1 year. That's over 1 year. So it's been up 15%. 15%, and they're still not making money in a capital expensive business. I do own, and I will tell you, I own QCLN. And when we go over to Seeking Alpha and we look up QCLN, let's see, QCLN right here. You can start to see exactly what's holding. Oh, come on, symbols. QCLN right there. You can see the holdings is what I want to show you because over on Seeking Alpha, QCLN, their holdings is 8.94%. Rivian's the number one holding in QCLN. Now, I like QCLN. The summary of QCLN is not good. Momentum is D+. It's down. Expenses C+. Dividends D+, because when you go over to expenses, this is an expensive one. It's 0.58. For the thing. It is undervalued. When I asked Bart whether it was overvalued or undervalued, it says it's undervalued, like the actual holdings are worth about $42. It's trading at $41.53. The risk is F. It's high risk because you've got a ton of stuff. Upgrading on valuation, this guy from Saturday, December 2nd, he says hold. You should be preferred, but if you're interested in clean energy, that's what this is. Liquidity is B+. The quant says sell it at 1.92. It's not something that I would tell you, oh my God, you've got to get into. You can see the current run on this one is about 31%. It's turning over. You're about to get that golden cross, so I would expect it to actually provide some support at 40. If you look at long term, and this is where I want, this has been a tough 2 years. For solar, for clean energy, for all of that stuff, interest rates going down are good for this industry. So while you may not have participated in this 31% gain over the past 1 month in this ETF, I think you could participate in the next move up to the 200-day, which is 26%. I like this one particularly to move. When you look at the holdings on this one, and when you look at these holdings, we're going to close that down. Rivian, onsemi, First Solar, Tesla, Albemarle, Enphase, Universal Display, Lucid, Brookfield Energy, Acuity. You could buy all these things. You could buy the 64 holdings that are in there. I just like it. And here's the other thing, and this is what I kind of geek out on Seeking Alpha a ton, is when you go over here and you look at QCLN, well, they got a whole bunch of peers. And you can take a look and just look at these clean energy ones. I'd rather have you in an ETF for safety reasons because I do think that Rivian is a bit risky. But if you want to trade it, go ahead and trade it. Bisco, from Spotify. Fairly new listener. Apologies if this is redundant. If I'm a buy and hold person looking for good entry points, value buys, would the algo be a good fit? Is there any good value? Yes. And I will tell you, Bisco, here's the way I use the algorithm is I don't buy and sell based on everything. And let's take Apple, for instance. Apple's a great example. If you want to trim your positions, you can trim it based on, the algo tells you to get out with a 12% gain. The algorithm, the 4-hour algorithm, it makes you 32% over 24 months versus 8% buy and hold on Apple. So it's not a bad way to do things, but understand the algorithm doesn't mean, for me, because I don't use bots, it doesn't mean I'm absolutely getting out. It's another tool. So think of it as an advisor that has absolutely zero emotion. It doesn't know that Apple has an iPhone. It doesn't know that Apple has the Vision Pro coming out. The algorithm doesn't know that Apple has, a high PE value. Even Tesla doesn't know that, Tesla is running at a huge price to sales. It doesn't know anything. Doesn't know that Rivian's losing money. Doesn't know that Fisker's losing money. It takes emotion out of the trade. It is just based on the charts. So for a person who's buy and hold, which I consider myself to be, I don't consider myself a trader anymore. Over the last year, I've probably traded, maybe 5-10 times a week is what I trade, but it's not on my big portfolio. The big moves that I make, it's maybe once a week, maybe, twice a week tops. But, I'm trading every day, kind of moving in and out kind of stuff, but in small batches. And that's only for psychology reasons. I am wholeheartedly a buy and hold guy. And I have to psychologically get myself used to not falling in love with stocks. And that's what TrendSpider has done for me. It allows me to get the emotion out of the trade. So do I think it's a good thing? Number one, you do need a good sized portfolio because TrendSpider does cost a little bit of money. I think on sale, it's about $400. Let's see if they still got the sale going on. If you use that link, you will always get the best offer out there. But let's look at it. Yeah, it's still $397 for the year. So understand that's skipping the 7-day trial. If you want the 7-day trial, you're going to pay quite a bit, $780. But this is the this is $397. You need the Elite because the Elite gets you 1 minute scanning, whereas the Essential does not get you enough. Scan on daily, weekly, and monthly. This one scan on all time frames. That's what you want. Because remember, the algorithm is just a back testing strategy. It just takes it and says, okay, your moving averages are here, your MACD is here, your RSI is here, and it says you're going to enter here. And it back tests it. And that's what you want to make sure of is that if you're implementing a strategy, and you should have a strategy, if you're implementing that, you basically want a strategy that will perform for you, that will outperform buying and holding. If you're just a buy and hold, and I'll tell you, right now, I've got a list here, low-cost Vanguard ETFs, and I tell everybody, if you're a new lister, I tell everybody on this one, VOO and VTI and other Vanguard ones that you look at, do not trade these. Absolutely do not trade these. The algorithm over 24 months on VOO makes you 12%. Sorry, 12%. Buying and holding VOO and over 24 months, you're down 0.4%. So it does outperform, but this is not meant to trade. This is meant to find you entries and exits. And if you want to trim on an exit, like if you wanted to trim here because it was going to go down, because you saw it lost confirmation, the algorithm got you out, and you wanted to save that 5% downturn, fine. Get out, but get back in. Just, understand the problem is always when you get out, you don't always remember to get back in. So I'm 100% with you in buy to hold. The entire reason the algorithm was built was around COVID. I didn't want to, endure that 40% loss ever again. So it was really built around that. JC Bro Brown from Spotify asked about PBLA. Let's see, PBLA. This is Panbela Therapeutics. This is a hope and pray. I mean, it is down 100%, I know nothing about this company. It's a therapeutics one. Trade it. It's losing $23 million. They don't have $23 million on the books, so it's bankrupt. I mean, PBLA at 93 cents, I think you're going bankrupt. You can read the recent news about it. New warrants in a private placement for $2 million. They need more than $2 million. Goldman Sachs sold on November 8th at 71 cents, and you're trading at 93 cents. I mean, trade it. Don't own this one. Performance year to date, you're up 1.64. It's down 1.464% today. 98% loss. Trade it. I don't even have to look any further. Just trade it. You can trade it on the 65-minute algorithm. Let's see. The 65-minute algorithm on this one loses you 70% versus losing 92% over 8.19 months. I mean, this is just a loser. I mean, don't get into something just because you heard something. If you have some insider information, absolutely get into it. But I would say, stay away. Anthony Roberts, hey, I was wondering what you think about Palantir. If you could check on it in the podcast, I'd be grateful, sir. Let's see. I think that was from Facebook, but let's look. I own Palantir. Palantir is down 1.67%. You can see this gap. I bought at 1850, hoping to get over 20. I bought, I think, 2 shares. Wasn't a lot. Wasn't a ton whatsoever. But here, I think you're heading to 15. I think this 50-day probably does the death cross. I think you've run up. Palantir right now, this is one of those that was up huge last year. Up over 1 year, it's up 160%. I do think you get back to 25. The target price is $15.71. Most recent September from HSBC, hold $16. I think that's a fair price for it. Your PE is huge. Your PE right now is 257. Your forward PE is 56. It is incredibly expensive. They do not have to issue more stock, so they are fine. They will not dilute you. But understand, I think Palantir is an expensive stock. I think when you buy on the downside of this one, I think you just play the upside. So, the algorithm just got you out with a 4% loss. I will probably get out thinking that, I'll sell that for a loss now that we're in the new year. I can write off that loss. But you're probably going down to fill this gap based on the earnings. The MACD is down. The RSI is down at 34. You could buy here at 16. I just think that volume shelf right there probably provides you some type of support. Let me bring the volume shelf back to an appropriate level where we were at. We don't want to go back too far, but we'll go back to earnings placements. And you can see, I think around $16, you probably got some support. But right now you've lost your confirmation. I don't think it's a good time to get into it per se. But if you want to dollar cost your way average in, I think at some point in time, again this year, you hit 20. So dollar cost your average way in. Scott from Facebook, I have 30% XLK, 30% in QQQ, 10% in SPY, and then 20% in the Great 7. I think it's the Magnificent 7. I have the Great 8. 10% of my portfolio is in trading. Do you think I'm overlapping positions? Maybe increase exposure to small caps? Thank you. So here's my thing. And it's hard. I've always said this. Strategies are meant to stick. So when you change strategies mid-life, mid-portion, mid-year, you tend to probably, FOMO is what tends to get you out there. And I have been for 35 years now, 36 years, almost 40 years. I have been a tech investor, heavy into tech, .com, lived through that .bomb period. I am big tech. I am not small tech. I am typically Apple, Google, Amazon, NVIDIA, Netflix, all of those types of things. I tend to think that you are overlapping with XLK and QQQ. If you've got 60% of your portfolio in those two, I mean, look at the holdings of QQQ. I mean, it's pretty much the Magnificent 7. When we go over here to holdings, you can see it's Apple, Microsoft, Amazon, Broadcom, Meta, NVIDIA, Tesla, Alphabet, Costco's in there. So you've got some good exposure, but Apple's almost 10%, Microsoft almost 18%, so that's 27%. when you go and you look at XLK, XLK is 50% Apple and Microsoft. So you're definitely overlapping. Now, Scott, I will tell you, I am not concerned about overlapping those companies. I would be more concerned if you were saying, hey, I'm in XLU and I've got a 50% Southern company. Well, that to me tells me that your strategy is income and not necessarily growth. In these, I'm not worried about beating the market. I'm more worried about if we do underperform in the Great Eight. Like Tom Lee says, he thinks that they will underperform the market this year. Then I think this year you might be in trouble. But and this is a huge but, you're not in trouble over the next 10 years. So I think your exposure has more about what your goals are and where you want to be. If your exposure, you want that to be less. If you're losing sleep over it first, get out. And put in some in VOO. It's the only thing I see that you don't have. IWM might be one that you want to look at. Look at the paid newsletter. I think you're one of the paid newsletter customers. Look at the paid newsletter. I think I included some small cap ETFs in the paid newsletter this weekend. Maybe look at those. And rather than 30% in XLK, maybe take 10% of that off. Because we are running on XLK, you're running at all-time highs, and you're about to turn over. And this is where the algorithm really helps you, is taking a look at that kind of bounce down. It's only from 192 to 188. So if you want to rebalance, now may be the time to rebalance this. Again, if we look long-term, this has just been a solid winner, and you're way up there. Don't be afraid to take off some here, thinking that maybe we get down to the 170s in XLK because that MACD is so high. Again, it's so high. Look at when it was running in 2021, when it was running this high at 6.93. In 2021, when it was this high, we went all the way down 31%. So I don't want to see you necessarily dump XLK, but maybe take 10% of that and throw it into VOO. And that will get you more exposure to the S&P 500. Maybe take it out and do one of these. Let's go to the newsletter so I can see. Because I included some Vanguard ETFs in this one that I thought were pretty good. Because again, one of my predictions is, and I've said this, Tom Lee has been right. He's been more right than wrong. So when he says it, see this section right here? Go in and look at some of these. VI, that's why I charted VIOO versus IWM. VIOO is a top 600. Instead of a 2,000, I think it's the 600. Yeah, small cap 600. So the problem with IWM and some of those ETFs with small caps, you get a tremendous amount of companies that are just not making money. So that would be my guidance is, 30% QQQ. I think you're diversified there enough. 10% SPY. I think you're fine. Maybe throw it in VOO track SPY. So maybe take 10% and put it into small caps. Everybody's saying small caps are going to outperform. Again, I think the first thing is, what's your outlook? If your outlook is 5 to 10 years, I think you're fine. I don't think you're going to lose anything in it because XLK, I think you're okay. I think technology is going to continue to outrun everything. And I think that grade 8 is still going to be the ones to buy. They have tons of cash. They're not affected. They're going to have tons of AI stuff. So I think you're fine. Scans. We had MPLX, which is an energy name, which has a tremendous dividend. This one, it's just been kind of fluttering around here. And I put in, I think in the paid newsletter, it might have been just a regular one. This is an energy name that hasn't broken down like other energy stocks. And it provides a 9.34% forward yield. I don't see any reason to get rid of this one in the near term. I said that. XLU, this is the utilities. This one has been beaten down. It's another cross up. What we're seeing now in the XLU and some of the utilities, some of the healthcare stocks, things of that sort, we're seeing a bit of a rebound in this stuff. You can see right here in the algorithm, it makes you trading XLU makes you 9% over 2 years, whereas you lose 11% with just buying and holding. It's a utility. I mean, this is mainly for income. And while the reason you lose 11% is because the income portion, people move to bonds instead of, having utilities. Why, if utilities are going to pay me a 5% dividend, why am I in them while losing 10, 15%? This is a 35% channel right here on the weekly. You're just getting to the 200-day. Now, you did just have a death cross, so there's some risk here. I don't think it's a ton of risk because, again, if you look long-term, this is kind of the way this one's going. And utilities, with energy, it's going to be good. Verizon, this is one that has like a 7% dividend, I think. I'll have to look it up on FinViz. But Verizon has a cross up here, 37.59. You're at 38.74. You're up 2% today. That's a big, big candle. You can see the difference in the other candles. It's a big candle. Maybe it's finally turned a corner. I don't know. Did Verizon get some news? It's got a 6.85% dividend yield. The PE's relatively, they're in a huge capital business. The average target price is 40. So if you buy here at 38 and you get to 40, great. Most recent price targets, 40 and 38. I don't think it's crazy. 5G stocks, broadband stands out, and enterprise apps wait for takeoff. Let's see about insiders. Sale, 127,000. That's an EVP. That's not much. IBM, O'Reilly, Kraft Heinz, Southern Company. Those are the ones. I'll put everything in the newsletter. Hopefully that gives you a good idea of where I stand on 2024. Today is down. We are not doing well. Let's see. The Qs, which is what I try and track, is down 1.58. It's a buying opportunity. Don't go all in. I would say do not go all in thinking that today is going to be the only down day and that we're going to bounce back tomorrow. I just don't see that happening. I see us on the downside of the Bollinger Band. I see us getting down to probably 399 here on the Qs, maybe in that name. But we're going to end in my mind, we're going to end the year higher. So in my mind, I think we're fine. So hopefully that does it. I will see you guys back here tomorrow. Take care. Have a great day. Remember, Linktree has all of the links for anything that you need. Visible, start your year off right with a phone service that actually works. Visible is through the Verizon network. We just talked about them. This is their prepaid plan. And all that prepaid means is that you pay for the month up front. Instead of paying at the end of the month, you pay for the month up front. But here's the thing. It's $20. And you get $20 off your first month. Wow, they just, that's a deal. $20 a month, they just reduced that price. This is down from $25. Let me see. Get 24 months at $20. So you get 24 months. Plus you save $20 with MyLake off your first month. That's a crazy good deal. Now, you are rate limited. I have this $20 a month one. I use it. I have never had a problem with it whatsoever. If you can't deal with the limiting stuff, $35 is what you're paying $70 for at Verizon. So start your year off right. But all the links here you can get TrendSpider, Seeking Alpha. Like I said, I geek out on Seeking Alpha all the time. You import your portfolio. I really, really, really like this one. So yeah, okay. I'll talk to you tomorrow. See ya. Okay. I only screwed up once. Why I didn't put the charts back. That's why I hate changing over. I always forget. Let me look at your, let's see, comments. You know what Kramer's 5-year return is? Yeah, Scott. Well, let me go up. Girls. Yes, hi, David. Old crew. Do you know Kramer? Kramer, you can't find it. I mean, he says he puts it. I'm not willing to pay Kramer's $400 fee for his investing club to try and find out his return. He says he provides it in there, but the fact that you can't find it tells me he doesn't. It tells me he doesn't tell us. His claim to fame is that he beat the S&P in his hedge fund for 11 years with an average return rate of 24%, where the S&P was returning something like 10%. That's his claim to fame. He gets a tremendous amount of money from CNBC. He used to work for The Street, I think is what it was called. And he's had, lawsuits against The Street with him and stuff. It got bad. It got ugly. But I think The Street even posted an article about his famous, douche calls. But Lunar. Why the hell is Brandon into Lunar now? Intuitive Machines. Down 30. Man, this is like your IONQ. I'm gonna bash this one, and then it's gonna take off. The algorithm does not do well on this one, though. You're down 45%. It saves you because you're down 73% over 24 months. LUNR. They're not making money. They don't even have a price to sales. I don't even think they have sales. Cash on hand, 1.94. Yeah, they're not worth anything. I think this has been a hyped one. I think. Go Girl, about Tesla, you are completely right. And in fact, Tesla, in my mind, is more of an AI company. And you can see we're already positive. We went negative, but we're already positive for the day. It's an AI company. If they get Project Dojo, which is recognizing, it's using AI to actually recognize your driving, and for full self-driving, I think that has tremendous selling power in the AI space. So I think you're right. It's more, they've got energy down in Texas. I think they'll work with other places for energy. Mara limit buy. ELF, I think, I think you're right, Sherry. ELF took a nice pullback. Let me get rid of these. Remove all annotations because we're going to, let's see. It's trading at 137. The only thing I worry about with ELF is the flight. From long term, it definitely looks, if they can continue to grow, I don't know if ELF or Ulta with its rebound. Ulta with, the rebound on Ulta, if we just look at a weekly on this one, I don't know which one would be a better, because look at that channel. That's clear we're just getting back into that channel. And is Ulta going to position well to continue and again wait for long term? Yeah, I think that right there, to me, you're still 13% from there. Is that all-time highs? Yeah. Yeah, the channels work on that one. Because you can see we came back to it. But ELF, from a long-term perspective, I think you're right. Listen, cosmetics, I don't. Let's see. Yeah, look at ELF. You're still solid there. Whew. Look at this channel. Just from the lows here. The only thing about ELF is if you take this channel, if you take that channel, but if you take this one, that means you're at the high. And that's what worries me about ELF, is when you look at this one. They're growing so much, though. Let's see. Just got Mara dipped this morning. I think Mara's. I got to buy BITO. Oh, here's Mara. 24.56. I think it's $30 stock again. I think it's minimum $30. Look at this long term. That's where that arrow comes in. That arrow comes in at $30. And so I don't think 30's a horrible valuation. You got the 50-day moving up. If that one gets a golden cross, I think you're going to 60. Yeah, Brandon, you know that unusual option stuff better than I do. Oh God, AMD I need to buy again. I need to load up on AMD more. I think AMD is just a solid chip play. It's down 5% today. Why the hell is it down 5%? It's just chips. Everybody's selling chips. No news. They're just taking profits. I mean, the PE is crazy on AMD, but I think I'd probably wait till about the 130 mark to start adding to it. If you're in this run and you bought at 95, I think you start taking some profit. If you're trading it. Long term, I don't think... I think AMD is perfectly fine long term. That, to me, you're getting back to all-time highs at 170 or so. Let's say it got to 160, 164? 164. Buy more Rivian on the dip or Amazon on the dip. Let's see, Emmer. If you're looking at the two, I would say buy Amazon on the dip. I wouldn't buy... Rivian's a tough one. I mean, it's down 10%. This is just... Understand, this is nothing more... Moderna's up 11%. This is nothing more than people taking their gains from last year and putting it somewhere else. Rivian was up huge last year. Let's just look at a weekly. Let's see. We're going to go from January. %. You know, and here's what you have to understand too. Everybody that was buying up here probably didn't take the losses down here, but everybody that was buying here on this uptrend in August and just got back to that, that's where you're having problems. We can pull this. So let's see. Yeah, look at that volume shelf at 22. I mean, that's where everybody's sitting and holding at 22. So that's where your resistance is coming from on Rivian. But if I had the choice between the two, buy Amazon. I mean, if you're in for the long-term trade, buy Amazon. Just buy Amazon. I mean, just buy it. Here, you know, and I've said this before. Look at this weekly on Amazon. You're still 13% up from this, you know, from the all-time highs. And Amazon's a better company today than it was back here in 2021. This was when they were growing. They were adding, you know, 1 million extra jobs a month, and they overhired. Then they cut their costs. Now they have AI. You can see the Bollinger Bands are expanding out, so it's going to go somewhere. And I just, you know, at 148, I don't think it's crazy. I mean, it's a little bit expensive. PE 70, forward PE of 40. But they're still growing. I still think it's a great one. I would buy Amazon on the dip. And the only reason I say that, Amber, is because I'm long-term. I think you could trade Rivian on the short term, and it might have more of a bounce than Amazon, but yeah, CELH, that one's been a... The only thing I worry about with Celsius is that hype train. Does it lose, you know, some type of strength with hype? Brendan, you talking about AMD's Lisa Su, I think her name is, the CEO? Buying and selling AMD. I think AMD. You can see she's had some big sales at 117, 125. It was Darla, the chief accounting officer. But Lisa Su's, I mean, I don't blame her for selling. Your stock was just in the 80s and it gets up there and you hold, let's see how much she holds. Look at that. I mean, this is when she was SVP. She was exercising. I mean, she was exercising all those options. So she holds. I mean, this is the number of shares. Look at that. She's got to be holding. Let's see. I think it'll. No. I don't know how to look to see how much she owns. But I don't think her buying and selling is anything more than, I mean, look at that heat map. It's a harsh day. Let's see. Let me check. Indices check for me, and then I'm going to head out because it's 10:30. I've stayed on for a while today. Yeah. Listen, I mean, in this kind of market, if you want to buy a stock, buy a covered call. Hoof. Today's harsh. I'm down 6 figures. But I've got cash on hand, so I'm going to be buying. I mean, look, okay, here's a good look at this. This is a great way to use this heat map. Look at tech. Look at financials. You've got some financial data. Consumer cyclicals down. Communications down. Consumer defensive up. Healthcare soaring. Energy soaring. Look at industrials, other than Boeing, because Boeing's just been on a crazy run. Rates up. Utilities soaring. This is how you use the heat map to try and find the sectors that are going. Now, when you look at 1 year performance, look at that. Complete opposite. So understand that's what's happening is people are just selling this stuff because it's the first trading day of the year. There's big money. So, even though I'm down 6 figures, I'm not totally worried about it. Okay. I'm going to head out. I'm going to put this together. I'm going to put the newsletter together. Thanks, you guys. Thanks for making it fun. I'll be back tomorrow.